Hey guys, it's Neil here, and today is day 4 of our 6-part video series, and today we're talking about the Perth market and rising interest rates. Now, on the left hand side there, you can see the HIA Affordability Index showing Perth as the most affordable state in all of Australia. Now, there's multiple factors which are causing this. Mainly, we've got the cheapest real estate in all of Australia. We've also got the highest wages in the all of Australia, and we've also got the lowest unemployment in all of Australia. Perth, right now, is a great place to be and invest. These two charts at the bottom here are from the Real Estate Institute of Western Australia, and these are reporting on the properties available for rent right now in Australia. I've got these stats just now from their website, and they're up to date. They're updated weekly. So right now, on the 12th of May, we've got 2,482 properties available for rent in Australia. This is a 0.5% vacancy rate. REWA say that a healthy market is 3 to 4% vacancy rate. So we are like well below that. We can see in 20 to 30 applicants put in applications in on rental properties for $50 to $100 over the asking price of the rent before they even view the property, because they keep missing out on certain properties. On the right hand side there, we've got properties for sale. 8,000 properties available for sale right now, only 4,000 houses. And the Real Estate Institute of Western Australia say that a healthy market is 13,000 to 14,000 properties available on the market for sale. We've got almost half. We are seeing anything from 10 to 30 groups viewing properties in desirable areas, and prices are still going for $50,000 to $100,000 more than they are on the market for. Now, the next stat I think will blow you away. Now, this is the HIA indicator score, which shows a lot of different statistics, but I want to focus on these three specifically. So the top one there is housing finance loans to non-first home buyers. Western Australia is the strongest state in all of Australia right now for non-first home buyers, people upgrading their properties because they're earning more money and they want to, keep up with the Joneses, move into a bigger house, move into a better house, maybe a better suburb. Now, this is stimulated by, again, the affordability index on the left-hand side. We can see that we've got the highest wages in Australia, the cheapest real estate in Australia, and the lowest unemployment rate in Australia. We've also got the largest amount in all of Australia of non-first home buyers upgrading their properties. That is a phenomenal stat because the Perth market has seen a lot of growth. I'm going to talk about the Perth market. I'm generalising it because there's always markets within markets, but as a general, the Perth market has seen the median house price rise significantly. It's the highest it's ever been right now. We're at the highest point. We've outstripped our last high, which I think was in 2011 or 2012. Right now, the Perth median house price for a house is $622,000. This has been driven by non-first home buyers. The other exciting thing right here is we are the second lowest state to have investor activity in all of Australia, behind Northern Territory. Now, let's look at this. Let's look at the table on the bottom left-hand side again. We've got 2,482 properties available for rent, a 0.5% vacancy rate, and we've got the second lowest activity of investors in any market in all of Australia. Now, we won't touch on first home buyers. We'll stick with the investors for now. We've got a chronic shortage of investment stock. We've got no investors coming back into the state. So this can only mean one thing. We've got 20 or 30 people queuing up at a property and offering more and more money for a rental, which means the rental yield on properties will get higher and higher. It will not be long before the investors start to flood back into Western Australia and start buying standard investment stocks and getting anything between 4.5% and 5.5% rental yields. Some are even getting 6%, which is great, absolutely incredible, because there's a lot of stuff in the media right now about interest rate rises. And if you have, let's say, the median house price in Sydney right now is 1.6 million. Let's say you've got $1 million mortgage and it's got a variable rate, and over 12 months it goes up by 1%. We've just recently seen a 0.25% increase, but let's say 1%. That 1% on $1 million loan is $10,000 a year. That's a lot of money. Now, if you're only getting a 2 or 3% yield on an investment property in Sydney anyway, that additional $10,000 is coming out of your pocket. But Neil, I can claim it back on tax. It's negatively geared. In the next video, I'm going to take you through. No, in fact, I've already taken you through it in video 1, negative gearing versus positive gearing. You were so much better off positively gearing. I don't know about you, but if I had to pay $10,000 additional on top of what I was already paying to keep a rental property alive, I would be suffering big time. Big time. Now, let's look at Perth again. If you've got a 6% yield and there goes up 1%, your yield drops down to 5%. You're still probably going to get some positive cash flow, maybe $2,000 to $5,000 a year if you're lucky. Now let's look at a HMO. HMOs are getting 10% gross yields. Our clients are getting between 15 and 20% cash on cash return year after year after year on the money that they've got in a deal. We, as a state, need investors. We also need to take some of the singles or couples out of the market so that we can free up the 3 and 4 bedroom houses for families to rent. So with a HMO or a co-living space or a rooming house, whatever you want to call it, you can potentially take 5 or 6 people out of the market, put them in clean, safe, affordable accommodation, and you can free up 5 or 6 houses for families to move into. Now, not only are you freeing up the market, you're getting positive cash flow, you're making a difference to 6 people's lives because they've now got more money in their pocket because they're renting a room instead of a house, and you're also changing the lives of 6 families there. Now, I don't know about you, but it doesn't get any better than that. It really is profit for purpose. So join me tomorrow. We're going to talk about new build versus renovation when it comes to investing.